think what's going on today is mainly that jobs number was very weak. And we see with the jobs number that Congress and the Senate have to get together and get another stimulus. If you look at the numbers, and this is what worries Wall Street the most, we have about 68 million people on some kind of unemployment benefit due to the virus. Roughly 40% of the labor force is on some kind of stimulus, some kind of help from the government right now. Come December, come the day after Christmas, 30 million Americans face losing unemployment benefits. But here's the bad thing. By the end of December, the 31st, 48 million Americans will face eviction from their homes or their apartments. Those are horrible numbers. That's like Depression-era numbers. So we know Congress has to act. So that's what's moving the market. The bad news for Main Street, good news for Wall Street, and we're moving the market on that, knowing that they're going to have to come up with a stimulus. Well, I thought we'd be down a little more this week. Like I mentioned, we opened up down. I thought we'd follow through. But I think the market now may close, because of the stimulus, may close higher for the year. So we'll be December, this time next week, we're at December 7th, I guess, something like that. So I think you'll see the market continue to trade up till the end of the year. If you had panicked in March last year and got out when this pandemic, you would have missed a really great run. I mean, we're all-time high. This is the fourth week. We're on now four out of the 5 weeks we've had all-time high weekly close. And I think a lot of people that missed that run are going to stay in it right now. Remember, Wall Street's always looking forward. So we're looking into March or April, hoping that things open up. We are going to be shut down, it looks like, probably January and February. But then, if this vaccine does kick in and does work, I think you could see the market really roar come the spring when the warmer weather comes here around the world too. When warmer weather in the Northern Hemisphere hits, I think you could definitely see the market trend even higher. You know what it is, Jackie? We're the best house in the worst neighborhood. I mean, if you look at Europe, Europe's in really bad shape. I think they're going to face a depression come this year. Early next year. They have no tourism, which most of the southern European states rely on. Greece, Spain, Italy. Their basic export is tourism, and no one's going. They can't go. So they're looking for that to open up. And I think also the warmer weather and the vaccine hitting could be a good sign for oil. People be driving more, flying more, cruise ships might be out there. But in general, people be out there using more energy. And remember, the winter, we always think of energy just as gasoline, but it's heating oil, especially in the United States. Most of these big companies, Chevron, Exxon, they supply heating oil to millions of Americans. And it's been getting cold. I mean, it has been outrageously cold, but it's cold where people are starting to use heat. So you'll see more energy used there. So I think overall it'd be a good time to play the energy sector. It was so beaten down. It's the leader today. You might want to get involved. You want to be in the market. If you're in the market, stay in the market. You should never panic and get out. That's the worst case scenario. But I think if you're in the market, stay the course. If you bought Apple a year ago, you're sitting pretty right now. If you bought even General Motors is doing better, So I think if you're in the market, stay in the market. Then, now if you want to pick new stocks, look for ones that were beaten up, like the energy sector was so beaten up last quarter. Nobody wanted it. They were disregarding it. The prices were all-time low. Now we're seeing a rotation into the energy sector. The techs, I think, will always be hot. People will probably be selling some of the tech sectors now only to make some profits. But I think the tech sector, when it drops a little, get in. I don't see the market crashing. I do see maybe some downward momentum, but I think over the long run, the market will close up for the year. I think that the majors are the long-term play. I think if you look at sectors like, say, the cloud sector, anything that has to do with 5 now coming out, I think those are the plays you want to be in. Apple, I think, will always be a leader, will always survive. They're way ahead of the game. They have their own infrastructure. I mean, especially like I just bought this Apple Watch. I mean, it's incredible, all the things it does, but no one can compete. A friend of mine works for a major watch company, and they don't know what to do because the old people are buying the watch, like me, are buying the watch for health reasons. It gives you all these health indications, whether your blood pressure's up, whether your oxygen level's up, and yada yada like that. The young people are buying it because it's trendy to buy an Apple Watch, and it comes with trendy watch bands. You can get extras, so they're having a real hard time with watches now, because watches aren't just for telling time anymore. And unless you have a watch that has an infrastructure like Apple that is tied into your iPhone and your iPad and everything else, you have a problem selling this now. And I think Apple has a lock on that, so I like Apple. The cloud, I always like the cloud. That'll always be here. It's something you always want to look into. And now we're also looking into gaming sector, the games. This stay at home has shown that Americans don't have to go to the work spot to work. They can do work from home. They can do teach education from home. As a result, the more they're home, a lot of these, especially young people, are on the gaming sector. So we've been looking at the gaming sector, been doing some gaming investing, and I think that's going to be a hot issue next year also.